Okay, I believe it's time. If everybody will come to order, we'll call this meeting to order. Somebody get that door for me. Yeah, thank you. Okay. Preacher Nix, will you begin us with a word of prayer? Thanks, Preacher. We're here today for a hearing on Senate Bill 139. It's a hearing only, no vote, but we'll entertain all the questions of the witnesses. Senator Miller, if you're ready, you can proceed, sir. Oh, yes, let me say, if anybody's here to speak for or against the bill, there's a sign-up sheet over here, if that's necessary. Senator.
Thank you, Mr. Chairman. I appreciate the opportunity to come before your committee. I will make some brief comments, and I'll call on Representative Donahue to go through the bill as well. We have worked closely with the business community to ensure that all parties had all questions answered concerning the bill, concerning its intent and its repercussions, and making sure there are no unintended consequences. We've spoken with the banking committee and others. Not that it matters to this committee and to the House chamber. It passed out with a healthy margin in the Senate, passed with 34 votes. This is a closing fee bill and permits the lender or the business to charge a nominal fee, and does not open up unlimited fees. It is measured, it is reasonable, and I think represents sound business practices for the additional expenses that lenders or businesses would go to in a somewhat risky or high-risk situation of lending. And at this point, I'll turn it over to Representative Donahue to speak to the finer points of the bill, and be glad to ask any questions before we close.
Does anybody have any questions of Senator before he moves on? Okay, sounds like they'll wait for their colleague.
Thank you, Mr. Chair.
All right, thank you, Senator. Mr. Donahue.
Thank you, Mr. Chairman. Thank you, members of the committee. Thank you, Senator Miller. I have Stephen Cobb also with me, so if there's any questions, Stephen will be able to help me. Basically, as Senator Miller.
Name again.
Stephen Cobb.
And who is Stephen with?
Stephen.
I'm an independent member from Gainesville.
Okay. All right. And you can identify yourself if you speak for the cameras and microphones, internet. Following procedure. Okay.
Thank you, sir.
Go ahead.
This basically is closing fees on money advances or credit extensions. What the bill does allows lenders and sellers to charge a closing fee on money advances on credit extensions up to 4% of the face amount of the loan or contract, but not more than $50. So if you were looking at the loan was $12.50, 4% would be the $50. If it was more than $12.50, $50 is the cap. But just for instance, if it was $500, you'd be looking at $20. And what this is doing basically is, with all the cost that small businesses have pretty much acquired because of different things that government has put upon them, like the Patriot Act, the red flag rule, different things, we're trying to have a little bit of opportunity to recoup some money. For instance, used to 4 or 5 years ago, you could go in and do an application, it was 85 cents. Now basically the credit bureau's $4.85. You have securing applications $10, all the way up to $84 as a minimum cost to $109 cost for each applicant. We're just trying to take and have a small amount to come back, because you have to also every year you have to go and make sure that I think it's pretty much OFAC rule requires that you pull a credit bureau report once a year, and that you make sure all of your customers are not, and verify they're not, on a terrorist list. So no matter what, you have to do that every year if you want to or not. Basically the minimum would be $25 would be the minimum retained if you paid that off 90 days or quicker. And that's basically it. It's a straight bill that's got a 4% cap of $50.
And I'm assuming you'll be handling the bill on,
Yes, sir.
on the floor. And are there any questions for Representative Donahue? Chairman Nix.
Thank you. How do they handle that now? Do they just eat it, or?
They eat it, yes, sir. They eat it pretty much. Each person that comes in, your average loan is $500 to $750. So your dryer went out and your dishwasher, and basically you're going in for just to get a little bit of money, but then you have to do the application process. And by doing this process, there's the cost of an average of $84, a minimum, up to $110, $109.85 to be exact. So what's happened, some of these people aren't approved of a loan. And there's so many requirements that small business is going through. All it is opening the door to get a little bit of the fees back for the time of the employee to pull the records and take the time to follow up on each applicant.
Additional question. So, if they come in and they make the application, do they write a check for that then before the application is done in case they're turned down?
They will write a check for that, and Mr. Stevens, correct me if I'm wrong, they'll write a check for that. If it's turned down, there'll be a minimum charge of $25.
We are not allowed to recoup.
We're going to have to.
I'm sorry.
Yeah,
And I'll let Mr. Cobb answer that.
Yeah, well, you can take take the podium to answer that question if you want to step aside. And then,
Yes,
again,
sir.
identify yourself again and who you're with.
Good afternoon, ladies and gentlemen. Thank you for your time. My name is Stephen Cobb. I'm from Gainesville, Georgia. I have 4 locations in the state of Georgia and North Georgia. I'm 41 years old, and I've been doing this since I was 19 years old. This is my full-time. This is all I do. Currently, right now, in our industry, you cannot recoup any cost of underwriting. We don't have the option to do that. We turn down more more applicants than we are able to approve. And currently, we have no ability the customer can't, the potential applicant can't come in and write a check for $25 if we turn them down. If we turn the customer down or the applicant down, we just have to eat the cost of underwriting it. And what's happened is with every well-intended privacy protection or consumer advocacy law and regulation that's been passed at either the state level or the federal level, we have to go out and hire a third-party vendor to comply with that regulation, or we have to spend a ton of money to train and comply on a monthly, yearly basis for every regulation. So what we're trying to do is recoup a little bit of the money of underwriting the loans that we're not able to make, as well as the loans that we are able to make.
Is your question answered?
Yes.
And if you have a question, do press the button, and then we're getting them. Okay, Representative Frazier.
Yes.
Yeah, well, because of the internet, they like for us to.
Thank you, Mr. Chair. My question is, will this be a one-time fee? Will we be coming back every year as the state and federal costs? Probably fees will probably escalate more. Are we starting now with a trend, or is this our only time we're going to be trying to recoup these fees? And is this the actual entire fee that's being recouped?
No, this is not the entire fee. Most of the fees, like I said, was running from $84 to $110 to process. And basically, we really are not sure of where it would go in the future because we don't really know what government will charge for another act or another verification. So that there would have to, depend on what the future holds.
So this is just a percentage of that?
Yes, sir. Yes, ma'am. Yes, ma'am.
Mr. Flood, Representative Flood, I believe. You're waiving, Judge Caldwell?
Will this fee be able to be charged every time they renew the loan to the same customer on the original amount?
No. Let me let Mr. Cobb answer that.
As the legislation is written, sir, any loan is a new loan, so it covers the cost of underwriting the initial loan, and it will cover the cost of compliance for any additional loans.
So every time you flip that loan, every 90 days or every 110 or 180 days, you get a new fee? They used to call it flipping, they probably don't call it that anymore.
Well, yeah, and that's not the industry model anymore. That's the way business was done 25 years ago.
But every
you know.
time if a customer had not paid off his loan, it was a 90-day loan, and he came in to renew, and he renewed what was owed, then you get a new fee.
That is correct, yes, sir.
Representative Jordan.
That was a great question. That was actually my question. But also, let me understand the process. When a person submits an application for a loan, that person is charged $25. Am I correct? Does he pay it before you approve it or after it's been approved?
Actually, is a process depending on the loan. If he borrows $300, the 4% would be $12.
So the application fee is judged on the percentage of the loan?
That's correct. 4% is the cap. It's a straight one-question thing of a 4% cap of $50 with a minimum of $25. But then if the loan is lower, like $300, that 4% will be $12.
Okay. Thank you.
Yes, sir.
What'd you say? Okay. Senator, did you have something to add? I mean, yeah, back.
If I may, sir, thank you very much for the questions. I think something we didn't speak to and cover is that, to answer your question more directly, sir, the fee is charged if the loan is consummated. So if someone comes in and applies for a loan, there is no fee. If they're turned down, there is no fee. If there is a loan, then there is a fee associated with that loan. Now, to answer your question, sir, more directly, yes, if that loan is renewed, that fee is charged again, because again, you go through the credit application again, you go through the credit report, you might do background checks, you might have investigational reports, investigational expenses, and so forth. But what's also, I think, a pertinent point is that if the loan is paid off within 90 days, it's returned at a pro rata amount. So the lender only keeps $25 if it's paid back early. So there is a fee involved if there is a loan involved. If there is no loan involved, there is not a fee. And I think I didn't make that clear, and I don't think we addressed that earlier. So maybe that helps a little bit. Thanks, sir. Mr. Chairman.
Do you want to stay and continue to answer? Or?
If you'd like for me to, I'd be happy to. I'm happy to speak to it as questions arise.
Chairman Knight.
Thank you, Mr. Chairman and Senator. I guess one of my questions, and I'd spoken to some folks who had come to me and talked about the bills, is one is make sure that these are really new additional charges that the industry is incurring.
Yes, sir.
So that's one point, and I think we've elaborated, maybe we can elaborate a little more, but in reading the bill, when this is the first time I've read the bill, it says, in addition to any other charges permitted for the advance of money or for the extension of credit. So I guess my question is what are we already doing out there, according to line 12 and 13? In other words, what are we already charging out there, and how far is it falling short of what you're needing?
Trying to cover your cost and so forth. I understand.
I mean, I think it's a fair question, and then I guess what is in terms of the loan, the average loan as far as a renewal? I'm not familiar with the industry, I've never loaned on it, but is the average loan turned over and over again, or is it the average loan paid off over time? And so I guess that may be a question that we may be curious about.
An industry question, industry trend question. To answer that question to the best of my knowledge, I think that we're upwards of 60% of loans are paid. So we're not flipping those loans, so to speak, to use the gentleman's term. We're flopping them, not flipping them. I don't know, but upwards of 60% are paid. So that leaves 40% that we're renewing. I mean, we're renewing those loans, but when we renew those loans, we go out and do a credit report. We go out and do a background check. We might have investigational expenses. That would be part of that business model. Hopefully that helps.
And then
There are no legal existing charges at present. We might have a loan expense, meaning interest, and I'm trying to recall exactly what the rates were, but I don't recall offhand. I did have them previously when I presented this in the Senate. I apologize, I don't have them today. I understand. Yes, sir. Yes, sir. That would be referring to interest loans, but this is not compounded with interest. This is a one-time fee. No interest is paid on this particular fee, just that one time.
You good, Chairman Knight? You're like you're cogitating there. Okay. All right. Vice Chair.
I understand, Mr. Chairman, to beg your indulgence. It's an unfamiliar industry to most of us. It's something that we're not work with on a day-to-day basis. So.
Vice Chair Williamson, do you have a question?
Just to help me understand, you're covering basically your underwriting costs. I know in the banking industry.
Let me interject. We go through this every morning in rules. It's difficult to hear. Speak as loudly as you can, and there's something going on outside too. And well, those don't work as well as that one and this one. But
Bruce Williamson, House District 115, Walton County. And the question is, I know in the banking industry, you do collect a fee from those loans to help defray the cost of underwriting the loan. And you get to this industrial loan application for the relatively small loans involved, you're having to go through the same credit checks, background checks. It's more analogous to the rental situations where people are renting an apartment. In that industry, they just charge an application fee and do the criminal background checks and the credit histories. And is that sort of this again similar underwriting that the apartment industry goes through? It's typically just a one-time situation. But isn't that more analogous to what you're talking about? Is a small fee
I think so, sir.
to get you to make sure you're doing business with somebody reputable enough that you'll be able to pay you back?
To investigate our risk and so forth. That's correct. That's correct. I wish I'd had you explain it.
Representative Douglas.
Yes, sir.
I got most of my questions answered when we were going around. The only thing that I want to ask is there anything that protects the client that walks in that says, okay, if you don't qualify, we don't charge you with it, we're not going to come back to charge you?
Yes, sir. There is. If you'll look in Section 1B, and I don't know the line offhand, Section 1B, when closing a loan has been charged a loan or contract that has been prepaid within 90 days of the date, a pro rata portion of the closing fee will be refunded to or credited to the borrower or purchaser as long as the lender retains no more than $25 of it. So there is some protection for the consumer as well.
Other than that, I think this is great because I own a mortgage company. And do you pull a tri-merge or do you pull a full credit report?
No, I don't know that answer.
Typically, you pull a full credit report, and it's a merged report for most people.
Well, I just,
And the cost of the merged report is upwards of $18 now.
yeah,
So-
tri-merge is 18. The
Yeah.
full credit report could be anywhere between $30 and $40.
And there is no fee if there is no loan. The person that comes in and applies and that is turned down, there is no fee trigger for that individual.
I just want everybody to know, just pulling all credit reports all day, that can shut you down. Don't just pull it step by step, because you have a bill, just think you got 500 people coming to your door, you got to pull each one of those credits, and you're not receiving a dime back on that, and you only approve 60% of it. You know,
We understand. We are in similar circumstances as well in my industry. Mr. Chair, if there are no-
Representative Duncan, I believe, is next.
Thanks, Mr. Chairman. Quick question. If you could just spend a moment to define the parameters of the type of lender this affects. Just the scope, I think you alluded to a minute ago, that not
Well, in terms of size, in terms of loan amounts, I don't have that in front of me at the moment, but this would be small loans, personal loans. You have the amount?
It could be any credit granting vehicle. It could be furniture sales if you're doing retail sales of furniture and financing it, retail sales of appliances, goods, chattels, anything that you're doing a financing transaction under, where you're having to pull a credit report and you're having to comply with the Patriot Act, OFAC, FTC, Reg Z. When we have all these layers of compliance, it's for anybody that has to fall under the compliance and the investigative process.
Thank you, sir, and for the question. But as we well know in business, small business particularly, we're increasingly having unfunded mandates primarily from our federal government. And you know, we discussed one earlier this week in another committee meeting that was an expense that was passed on to small business, and small business is having to absorb those expenses.
Representative Coomer.
Thank you, Mr. Chairman. A couple points. First of all, let me thank the senator for bringing this bill because I think not only does it have a good business sense to it, but also has some very strong consumer protections included. The questions come up a couple times about whether or not a fee would be charged for an application that was denied. And if you look at line 13 of the bill, well, 12 and 13, it says that essentially a lender or seller may collect a closing fee at the time of making a loan. So there's not a fee at the time of application. It's only at the time of closing the loan when the money is exchanging hands. So that should be pretty clear to anybody that there's not a per se application fee, but only a closing fee. And also in section B, there's another, I think, very strong and important consumer protection policy statement, and that is that we're encouraging people to pay these loans off within 90 days by giving them up to half of the fee back, which I think is an important policy consideration for the committee and for this General Assembly when looking at how to improve industry and at the same time balance consumer protections. And I appreciate the balance and the thought that you put into the bill.
Thank you very much. I appreciate those comments.
Representative Strickland.
Thank you, Mr. Chairman. I'm not familiar with these kind of loans. I'll sit up front. What are the average interest rates you have for these type of loans?
You know, that's what I was referring to earlier, and it's a tiered rate, and I apologize that I don't have that information. Mr. Cobb may be able to answer that.
Our current rate structure in Georgia is we're allowed to charge 10% per annum interest, and then we are allowed to collect an 8% fee of the first $600 of the loan. And that doesn't get us anywhere near underwriting. So we're allowed to get 8% on the first $600, and up to $3,000 you can get 4% of anything over that $600.
These loans typically will have any sort of security with them?
You can secure them, or they can be signature loans. It depends on the structure and the lender, quite honestly, there.
Chairman Hill, make sure, did you waive? You waived. Okay, then I believe Ms. Frazier had another question.
Yes, thank you, Mr. Chairman. I see the verification for making a loan on student credit. And Representative Kuma asked that question. I thought I had clarity, but I still don't. In making a loan, does that mean securing a loan that the fee will be charged, you're not charging a fee if the application does not clear?
You made that statement correct. There is no fee if there is no loan. When the money is transacted, then there is a fee assessed. That's what making a loan constitutes a transaction.
Representative Flood, did you waive again, or did you?
I just wanted to clarify. Thank you, Mr. Chairman. To the senator, just so I understand, I think Mr. Cobb said that the average loan is about $700.
Between $500 and $750.
So at $750, the fee would be $30. Just like with any other traditional lender, when a credit is extended, whether it's a new credit or a rollover credit or a renewal credit, then a fee is charged for the same level of effort in terms of pulling credit reports and verifying whatever other verifications need to be made. So it's consistent with the other financial institutions in the state.
Yes, sir. It's actually lower, but yes, sir.
Okay, just want to make sure. Thank you.
Thank you.
Mr. Chairman, if it pleases the committee and there are no further questions of me personally,
There's one more question,
Sure.
I believe. That,
beg your pardon.
he waves. Anybody else? And Chairman Houston, did you? Well, we're not going to take a vote today. Yes, ma'am. This is a hearing only. Thank you for that, though.
No, I thank you as well. I thank you. My children thank you. My wife thanks you.
All right, if there are no more questions, Senator, do you have anything you want to close by saying?
Mr. Chairman, just thank you for the opportunity to come before the committee. I appreciate the committee's diligence and thorough investigation of the bill, and I appreciate your favorable consideration.
Mr. Donahue, do you have anything to add?
No, thank you.
Okay, the only person that we had signed up was Mr. Cobb. Yes. Yep, thank you. If there is nothing else, we'll be adjourned.